Hey traders, Raghee here. Welcome to Charts and Coffee. I am going to be rocking today's Charts and Coffee sans the camera so you can hear me, but I know you can't see me. We just wrapped up our non-farm payroll session, so I just did not have time to set up the camera. So we're going to y'all see the charts in front of you. We're going to walk through what I did with our Sector Secrets Mastery members for the non-farm payroll. So great to see everyone. And yes, my folks on YouTube and the Twitter and Facebook. Yeah, today we're going to rock a non-camera Charts and Coffee. I just simply did not have time to set it up. We just wrapped up our non-farm payroll session. So let's talk about NFP here this morning and what we have going on. All right, so this morning for non-farm, we did our, as I sometimes like to call it, the first come, first serve hourly price movement range entry. And what that means is I'm using the hourly price movement ranges, the HPMRs. It's an indicator that I created, a process I created. Gosh, it's over 10 years ago now. We have an indicator that plots these zones right on the chart. And this, it's just a formula based on historical volatility, right? These two zones here. It's a formula based on historical volatility that tells me where volatility-based support and resistance are. And when we have a volatility event, like non-farm payroll, a volatility-based tool is exactly what I'm looking for, all right? By the way, and it's not too late to do so if you already have not. The webinar replay from our Wednesday evening webinar is available for replay over at simplertrading.com/opportunity. So the replay is there. And again, no suspense here. You have until the 7th, gang, to sign up for the trial package. I emphasize package of the Sector Secrets Mastery Room. It's $7, and it does include, gang, 30 days of the hourly and the daily price movement range. So I'm not talking about something that you can't check out. So HPMR and DPMRs, you get 30 days access to these to check them out. And this is what I used to trade non-farm this morning, the hourly price movement range. And it includes a whole lot more, but I just want everyone to know that that is one of the things you get. All right. So what we had this morning was a range that was highlighted by the HPMR, and the very closest, and this was a wonky NFP. It was very volatile. The wick into the zone was lightning fast. I haven't seen a wick like that on NFP where it does not linger at all in a while. I'd say 50-50 in terms of speed. This was a pretty quick, if not, it's a tricky fill. All right. I just want to be really clear about that. We made a high at 4538.5. The room, myself and the room, had limit orders to sell. So we're using price conditional orders on the ES futures or the MES futures. We had limit orders to sell at 45.37 and a quarter. Okay, so that got triggered. We took that down to 45.27 for the T1. And frankly, I missed T2. I was a little, the volatility was crazy. I did not get a great T2. It happens. And we were thinking about, I initially was looking at this area around 45.13 and change. Then I looked at 45.20. But ultimately, I ended up getting trailing stopped out at 45.25. So we took one target at 27, the other one at 35. So this was a 10 and then 12-point win at $50 a point. Okay, so $500 and $600 per contract. Okay, and that was this morning's trade. Now, the second part of this non-farm is what happens to the, here we go here, what happens to our expectations for the rate cut or hold, right? Now, before NFP, expectations for a hold were at 78.5%. Gang, this is macro. There's a lot of pseudo macro analysis out there. Macro is a rate of change understanding of jobs, inflation, growth, and really a lot of that just lands in the target rate probabilities. So big shout out to the CME for giving us this great graph. The expectation for a hold ticked up 5 percentage points for September. So we were always looking for a hold. Now we're looking for a hold that much more. It ticked up nearly, let's see, this was at 62.1 before NFP. We'll see where it is around 10 a.m. again. But you can see how much more we're expecting the hold. Okay. And then December, we were at 59.9 for the hold. Now we're at 63.6. So everything ticked up a little bit for the hold, right? This is the most probable. It's the tallest column. And as long as 5.25 to 5.5 is the tallest column, that is the quote unquote hold column. By the way, the hike column is 5.5 to 5.75, while the quarter point cut column is 5 to 5.25. So this is how we can interpret. And believe me, Kapowell and company, Jerome and the group over at the hallowed halls of the Federal Reserve absolutely know where these figures are at. Believe me, they know. All right. So there you go. That's what we've got in the wake of NFP. Now notice, not once. Frankly, gang, this is going to be the first time I'm even looking at the NFP. Now, I don't even know what the number was. Don't need to, because the number is not as important as the reaction. Okay, so scroll on down. Take a look. So what was it? All right, so the unemployment rate, ticked down. Okay. So this is why the aftermath is a little bullish. That's why. If you've been following along with some of the analysis, a miss, right? A miss in jobs, which is to say lower jobs, is actually bullish. Why is that? Because traders can tell Jerome and company, hey, you're breaking the economy via weakening the jobs. Good data, strong economic data is bearish to equities. While misses or weak data, anything that suggests jobs are not as healthy, or inflation is higher, or growth is slowing or lower, those are all going to be giving a certain reaction. So we always ask ourselves, how will the market react to a miss in jobs? It's going to react positively, because this reduces the likelihood of the Federal Reserve, the FOMC, the voting body, hiking rates. And we can see that play out in the data here. So notice I didn't really need to see 187 versus 205. All right. Oh, that opportunity link isn't working? Oh, my apologies. I thought it might have been changed. That was the webinar registration page. It usually keeps working. If not, it'll be opportunity-replay. Okay, let's see here. No, it's right there. Tom, nope. If you go to opportunity, simpletrading.com, this is what pops up. Nope, it does work. That should work, I think. If I'm wrong, I apologize. Click on watch replay. It could, yeah, it could be, and they'll fix it. So thank you. Yeah, they'll fix it. The link was wrong. Oh, thanks for the heads up, Tom. Yeah, thank you, Tom. I appreciate that. For crying out loud. Yes. Oh my gosh. That'd be terrible to see the wrong replay. Yes. Thank you, Tom. There you go. All right. So that's the, hopefully, yeah, just refresh it. And yeah, I can see it's the wrong one. Nice. Thank you, Tom. I appreciate it. All right. Okay. So back to NFP. All right. Back to NFP. Any questions on that? Yeah, so that's what we did this morning. So some of you might ask, Rog, what now? Nothing. Nothing. I'm not looking for a buy. I'm not looking for a short. I took my 10 and 12 points. I took my ball and I went home. 9:30, we'll start looking all over again. Yes, 9:30, we'll start looking all over again. Okay. And by the way, gang, the replay is available on the Simpler Trading YouTube channel as well. All right. Let's see here. Couple questions. All right. Thank you for the questions. Good morning. Good morning. Yeah. So, Aaron, the Simple Trading HPMR stock doesn't draw anything on stocks for me. The ETF one works for SPY and Q. So, remember, Aaron, there are 3 packs. There's a stock pack, there's an ETF pack, and there's a futures pack, right? And there's a specific set of symbols that we have for each, right? So make sure number 1, your stock pack is installed. Yes. And then make sure the symbol that you're bringing up is supported by that, by the HPMRs. Okay. So, it happens to everybody. No, it's okay. Sometimes I find also that once I've installed an indicator, sometimes toss is kind of slow to catch on. And I find if I restart Thinkorswim, even humans, it's amazing what a nap can do. So sometimes a quick reboot takes care of it. Gutto asks, are these indicators available on TradingView? Yes. Once you check out the trial, we can activate you for the 30 days on TradingView as well. All right. How do I manage to put in an order as I'm constantly talking and writing on workflows? Sue, I've been trading for 30 plus years. It ain't easy. I will tell you this, but I'm not asking anyone to break out the violin for me. It's not easy. It's a lot of work. It's a lot of work. But I also find it's the best way to support the folks who've entrusted me with their time and to a certain degree, even their money. So yeah, it's a lot of work and it's a lot of espresso. But because I use limit orders and because I use very simple platforms that allow me to put in a price, put in a limit or a stop and enter my trade like that, it's actually very manageable. If I were waiting around trying to click the market order button, it would never work. It would never work, right? So I'd say half the reason I do it is because I've been doing this so long. Because it's very important to me to have notes for the members. Some of you will see the notes right in here. Yeah, for those of you wondering, what is Sue talking about? This is all the stuff that I'm sharing with members. But because it's so easy for me to place a limit order on a platform, I can do it. If it was market order, could never happen. Yeah, so I appreciate the question. It's just something that I have, frankly, developed the skill to do over a decade of being here with Simpler and even before that. And I'm not even a great typer. I'm not even a great typer. Before that, I used to write. I used to do a lot of writing, but conditional orders on a simple platform makes all the difference, right? If you're going to use market orders, ain't going to work. For example, today's wick, no way would I've caught that with a market order. I'm not a fan of market orders. Many of you know that. Yeah. All right. So what else do we have this morning? Questions. Amazon. is flying is the question or the comment. Hey there, Freddie. Good morning. So Amazon is trading up at 140. Yes, Amazon is en fuego this morning. Yes, it sure is. I'm not gonna. We might look at some day trades in Amazon. I don't know, but yes, it's going to be opening way up here. It's going to be hitting, I believe, a high for the year. Yeah, high for 2023 this morning. So Amazon, and that's going to, by the way, pull XLY up likely too, right? XLY is the consumer discretionary ETF, right? And it is where Amazon at a sector ETF level is most heavily weighted. And if XLY is heading up, of course, Tesla can do its own thing, but the tide is rising. So look for Tesla to open a little stronger as well, because Amazon's heavily weighted in XLY. XLY is Amazon and Tesla. Let me show you what I mean. And so we could see this sort of sympathetic rising tide effect happening there. So keep an eye on that. All right. Alex says, I wish all my futures trades were as easy as this morning. Alex, it was a good morning. I agree with you. Easy? I don't know, but I'm glad you thought it was. I think it is easy when we're able to set up the trades in advance of the hot zone, right? So you'll see here, this was at 827. Those were the orders I parked. A limit order to sell at those three levels. After the wick for non-farm was established, I canceled 42 and 3/4. I canceled 48. Crazy candle. Those never even got reached. 45, 37 and 1/4 got tagged. All right. And then and by the way, I had to wait for the candle to come back to 27. And I'll tell you what, I really should have been more aggressive about T2. And I'm a little disappointed in myself for that. I'm always looking to get better, gang. As I like to tell my traders, be tougher on yourself than the market could ever be on you, right? Great advice. Someone asked, I think it was Wilt Chamberlain once, hey, why are you such a great ball player? And he said, I'm tougher on myself than anyone else could possibly expect. And I look at it that way. So I'm always, even though we had a good morning trade, I'm going to say, what could I have done better, Rog? What could we have done? And I think I could have had a better either trailing or T2. So the indicators certainly gave me the opportunity for it. So the indicators did their job, and you can see here, 45.20. We were even looking at 45.13. Yeah, so I'm a little bummed about that, but it's okay. By the way, if we are one of the markets that I want to see head higher is bonds, right? I want to see the bond market start to establish a bottoming pattern again. We're not there, but bonds should be generally higher on that non-farm because we're seeing less expectation for a hike, more expectation for the hold. Holds precede, that pause precedes the cut. And this should help possibly put in a low on bonds, but we won't know for a few days yet still. All right. So that's the morning, gang. That's the morning. I will talk with you all on Sunday for our top tier outlook. And again, if you haven't already, check out the webinar available at the Simpler Trading YouTube channel. Or here, let me just update this. If you head on over to simplertrading.com/outlook, and I do believe that link is populated correctly, at least I hope so, you will see that the trial package details are available there. Okay, gang, this trial package is available till Monday. So please, gang, if you've been wanting to come trade with me for a month, this is the month. This will not be available after the 7th. And I'm not trying to be all, if you want to join it, great. But please don't come to me on Tuesday and say, I missed it. That would break my heart. All right. Okay, gang. I will talk with you all soon. Have a terrific Friday. It is a caution day. My mastery folks, I'll see you in just a moment. All right, gang. Be good to each other. Talk to you soon.